For the avoidance of doubt, The Simple Side does not provide investment, tax, or legal advice. As with any asset, the value of any asset class can go up or down, and there can be substantial risk that you lose your money buying, selling, holding, or investing in any asset. You should carefully consider whether trading or holding assets is suitable for you in light of your financial condition.
All right, welcome back to The Simple Side. And if this is your first time here, welcome to The Simple Side. And you picked a great day to listen to the podcast or to read the newsletter, because today we're going to be doing an exclusive look into the inner workings of The Simple Side's success. This is, of course, going to be a free edition. That's right, no paywall today. We are going to give all of our free subscribers a look into what our paying subscribers have been receiving every week for the past 20 weeks that has outperformed the market on all fronts: our short-term strategies, our long-term strategies, and our mid-term strategies. So without further ado, let's get into what we've got today. Of course, like I said, this is going to be a free edition, but if you like more of a short form stock analysis or daily analysis, just financial information in general, I have a daily newsletter that costs $10 a year or $1 a month. It's very cheap information, and it's going to be a heck of a lot better than a lot of the other sites out there. You can go check that out by clicking the link in this newsletter or looking up The Simple Side Daily on Substack. Now, I want to remind everybody that paying subscribers have access to the $2,000 giveaway we're going to be doing in December. That, of course, should be happening sometime next week. I'll send out an email to paying subscribers telling them who won that giveaway, and we'll talk about how I can get you that $2,000. Another really interesting thing that we have coming up: I am working with brokerages to get copy trading set up. So what's going to be happening is you'll be able to log into a brokerage, and you'll be able to go and find the Simple Side Index. And you'll be able to simply one click, I want to buy this index, I want to follow these trades, and you will be following all of the trades that I make without actually having to do any of the investing. So I'll be able to give you a list of who knows how many stocks, 61, 51 stocks, and instead of you having to individually go through, buy each one of those stocks, manage the whole portfolio, you'll be able to just copy and do everything that I do all in one place. As a reminder, you can also find all three of my strategies: the weekly Saturday sendouts, the flagship portfolio, which is our long-term, and the contrarian trades, which is our mid-term strategy, on the home screen of our website, thesimpleside.substack.com. So go check that out. Also a reminder that I will soon be releasing a Q&A podcast / newsletter to answer any and all questions that everybody has. So if you're a paying subscriber and you want to get access to that, be sure to go paid now. You can also reach out to me at thesimplesidenews@gmail.com to ask me any questions, and I'll respond to you, and I'll probably include those in the Q&A. And there's also a button that you can click here in the newsletter. Again, that can be found at thesimpleside.substack.com, and you can send me a question there. All right, let's look at our past performance. We have been averaging for the past 19 weeks 1.07% returns weekly. That translates into a 55.75% return annually, which is just incredible. And if you're on the newsletter, you can see the graph of our current returns. We started with $10,000, and that $10,000 invested in the SPY would be worth $10,668 today, whereas $10,000 invested weekly into our stocks that we've been sending out in this newsletter would be worth $12,037. Make sure you go and check that out. I've got a link in the newsletter that you can go see all of the historical investments that we have. They're all laid out. So go and check those out. We love to be as transparent as possible. So if you have any questions, please reach out to me, and I'll be sure to answer you and get it all figured out. You can also go see our performance tracker. So like I said, this past week, we beat the SPY by 0.08%. It was a small beat, but it was a beat nonetheless. Over the past 19 weeks, we beat the SPY by 13.74%, and annually, we're expected to outperform the SPY by 37.61%. So you can go see all of the previous week's returns and how we've done in the newsletter. Go and check those out. Remember, paying subscribers get access to those weekly picks, but this week, it's an exclusive look. It's free. I'm going to do a long podcast today, but you'll be able to hear everything that they are getting access to. All right, so let's talk about politician trading. We track two ETFs for politician trading, NANC and KRUZ. These are two ETFs that you can buy in the USA. Sadly, you can't buy these if you're abroad. But this week, Nance was up 0.18%, Cruise was up 0.03%. Nance, over the past month, had returns of 4.06% and is up 32.07% year to date. Cruise is up 5.62% over the past month and 21.87% year to date. Again, those tickers are NANC and KRUZ, Democrat and Republican tracking ETFs. Contributing to those gains over the past 30 days, I've seen 12 politicians make 73 trades, and they've invested over $950,000 this past week. Now, this is actually a relatively low number, but we've seen something similar happen over the past 2 or 3 weeks now. We've seen Marjorie Taylor Greene buy like it is going out of style. And this is typical. Her purchases have remained between $1,000 and $15,000, but she just seems to buy the entire market. Now, she tends not to have anything interesting in her buys, buying things like Amazon, Walmart, Microsoft, Google, that kind of stuff. But she did have an interesting stock that stood out to me this week, and that is GSK PLC. I'm sure you've seen their name around before, but maybe never noticed. It's kind of that weird guitar pick looking orange triangle with GSK in the middle. Their ticker is GSK. And based on historically discounted cash flow analysis, the stock seems to be undervalued by 11%. My personal stock price predictor has the stock undervalued by 22%, and analysts have the stock undervalued at 23%. Now, with all of these three aligning, that combination caught my eye. Now, the company has also been aggressively paying down debt since 2019 and has a great return on invested capital, and they started buying shares back in 2023. So, for all those reasons, I see the stock as a buy opportunity for this next week. There's definitely some probability that the stock will be jumping up based on all those undervalued percentages there, and also the fact that they're actually performing quite well in buying back shares. You can see a picture of the past 5 most recent politician trades in the newsletter. Again, you can find that at thesimpleside.substack.com. So go and check that out. All right, let's talk about insider trading. The ticker or stock or ETF that we track for insider trading is SURE, ticker SURE. And that was up 3.3% this week, 6.64% this month, and 20.28% year to date. Now, the stock that we're going to highlight this week from insider trading is one that we've highlighted multiple times before, and it is PBF Energy. It's a stock that we can't seem to escape from when it comes from insider trading. And PBF has been at the top of this list for a while now, and we've got a quick little analysis that you can see in the newsletter, just a quick one-pager. But there's one thing that's keeping me from putting PBF as a possible buy opportunity for next week. It's their revenue per share. It's been declining over the past 12 months, and it seems to be in correlation with poor management within the company. Well, that or the company is facing some serious growth issues, but you can go and look at this ridiculous graph that shows the insider ownership over the past decade, and what we've seen is insider ownership growing greatly. I mean, it's gone from basically I don't even know. It's crazy. Go and look at this. We've got the stock rated at a 6.9 out of 10, and we're not going to be rating it this week or buying it, but go and check that out. You can also see the top 5 largest trades from this past week in the newsletter. So go and check that picture out as well. All right, let's talk executive trading real quick, and then we'll get into some interesting stuff that is only in the paying newsletter that is going to be free for everybody today. Total executive ownership in the top 5 companies grew 289% this week, which is one of the highest growth weeks we've ever seen. We don't have an ETF to track here, sorry, but the largest increase came from a director at Walmart who increased their ownership in the company by 231% at a purchase price of $91.81. The stock currently sits at a value of $92.60, which is a 0.86% change from that insider buy. Walmart, however, isn't the stock that I want to highlight this week. My models have the stock overvalued by about 60%, so there might be something worth looking at there, but I want to highlight Myers Industries, ticker MYE. The company is an interesting one and sits at a 40% undervalued rating based on my rankings and is a 7.5 out of 10 based on my model valuation. The discounted cash flow on this stock says it's 32% undervalued, and analysts are saying there's an 89% upside. But math and analysts aren't the only thing that decide whether or not a company is a buy. The company has a couple of warning signs, and one of those is that over the past 12 months, we've seen revenue per share drop. We've also seen the return on invested capital decrease and the weighted average cost of capital increase. Did all that crap just hurt your brain a little bit? Too much jargon? Mine too, but basically what I'm saying is the company isn't as efficient, with its money as it once was. That being said, their margins have been increasing and their dividends have been increasing, and insiders are buying the stock up. For all those reasons, I think Myers is going to be a buy for this next week. I see a buy opportunity there. I think there's potential for the stock to bounce. You can see the other 5 most recent and highest executive trades in the newsletter, so go and check that out. All right, now we get to get into the paying subscriber stuff that is usually paid, that this week we're going to be presenting for free, and I hope that made sense because it sounded a little bit interesting, but get excited because typically all this information is paywalled, and I'm going to talk through it, which I usually don't do either. I'm going to talk through a lot of this with everybody, and if you want to be a part of this later on, I put a 20% off discount code in the newsletter, so go and click on that button, take that 20% off, and join us for the 2025 year. All right. Let's talk about next week's playbook, which are the key opportunities and insights that I see for the next week. Of course, right here, I'm going to highlight out all of the buys that I see for the next week, and all this will be listed below as well, or above, from the politician and executive trades. But you can check those out, and I want to talk about something cool here, which is our top investment ideas. So every week I go through and do analysis on tons and tons of stocks and find ones that have good financial strength, good operating margin, high profitability, good earnings per share growth over 5 years, good revenue per share growth over 5 years, and then I find which ones are undervalued, oversold, or are missing opportunities that investors aren't seeing, which means they have a great propensity, a high propensity, which means they're likely to jump over the next week, and that's what we try to capitalize in this newsletter. So the first one that we have today is INFY. I talk about technical indicators here, the RSI, the momentum, and the MACD. I do the same thing for Regeneron Pharmaceuticals, REGN, ticker symbol, Monolithic Power Systems, MPWR, and then ASR, which is a Spanish name I'm not even going to try to pronounce, but the ticker is ASR. So go and check all these out. I think these are really interesting stocks. The way that we analyze them, they've performed well in the past. As you can see, the newsletter's been performing well. So you can go and read through that. I also talk about a couple of our contrarian trades. Now, these are newsletters that get sent out to paying subscribers only. And they don't come out very often, but when they do, they tend to hit very well. For example, one of the stocks I talked about not too long ago, I think earlier this year, not even earlier this year, maybe a couple months ago, was HIMSS. And that HIMSS trade is currently up 94%. And what I do every week in these weekly newsletters is I discuss what's been going on with the stock over the past week, some interesting news that's happened, and whether it's benefiting or going to be hurting the stock, and then an outlook, how we think the stock is going to perform over the next couple of weeks, and if we think we need to make any strategic changes. Now for HIMSS, we've seen regulatory shifts that are actually going to be benefiting the company. So we're expecting it to stay about where it's at, but that 94% return is incredible. In the past, we've had stocks like Weight Watchers return over 175%, and we've sold those. I mean, if you capitalize, and that happened within a week, and if you can capitalize on 175% return in a week, it just makes too much sense not to capitalize on that, and so we've sold those. I also talk about our SMR, data centers, and energy trends. So these are what I call the secondhand effects of AI. And these are stocks that I've been investing in heavily. Since I started this bet on November 13th of 2024, the portfolio has delivered an impressive 5.68% total return, outperforming the broader S&P 500 index which has only returned 79%. It's outperformed the Dow, the NASDAQ 100, everything. And you can read about the forward outlook and some of the companies that are performing well in that portfolio. at this point in the newsletter. Like I said, we're up 5.68% since November 13th, which is handily outperforming the SPY, which is only up 0.79%. I also talk about our flagship portfolio here, which is our long-term holdings. Again, that's up 38.02% year to date, which is again outperforming the SPY at 28.07%. So go and check that out. And then I get into something really cool, which are micro cap finds. So I picked the top 3 best performing micro caps based on 1-year volatility, the 1-year Sharpe ratio, and the 1-year Sorrentino ratio. And I talk about what all that means in the newsletter, so go and check that out as well. And then at the very end down here, I also talk about implied options price movement. So, we have companies that are doing earnings every single week throughout the entire year. Stocks are always doing earnings. And I talk about the ones that have the highest expected price movements. I talk about the sentiment that's going to be pushing the stock, whether it's bullish or bearish, and then a quick analysis about why I think they will be bullish or bearish on their earnings. These are stocks that I look at trading different kind of options on, or whether it's just investing or trading a covered call if I own the stock already. Go and check that out as well. It's really interesting. Like I said, this is stuff that usually only paying subscribers get access to. So if this is the first time you're seeing this, take it all in, read through it all, and see what you like or dislike about it. And then reach out to me. Let me know if you like it, if you don't like it, what you think I should add, change, whatever. But if you want to go paid and get access to this every week, I would recommend doing it now. I think there's a Black Friday deal going on. If you can go and find that on my website, thesimpleSide.substack.com, or find one of your friends. It might only be in email format, and they might have to forward it over to you. So be on the lookout for that. You might have to check my notes page for that as well. But enjoy this. I know it's kind of been a rambling podcast. I'm getting this out late because I was debating whether or not I was going to go free or paid on the whole thing. So enjoy it, and I will be seeing you next week. Paying subscribers only, of course, will be getting a lot of this information. But I hope you enjoyed today's podcast. We'll see ya.